Hola guys, ¿qué pasó? What's going on? This is Hala Pablo. How's everyone doing? Let's do another Bitcoin update here. All right, so as you see, we're at trend resistance again. Trend resistance. There's a battle being waged up here. I'm pretty certain, fairly certain, I know how this battle's going to end. But nonetheless, I wanted to share with you guys. We could look at the metrics, the volume metrics, and the Wyckoff, along with the patterns that have been forming, in particular the rising wedge, or some people think it's a parallel channel. I think it's a rising wedge. It's really doesn't really matter. It is distributive long term, I believe, because we've come out of this macro bull cycle that we had last year with the top of 60,000 Bitcoin. We've come out of that. We see this extended mark down here. And what the pattern is, after we bottom out, we go through a series of secondary tests and automatic rally secondary tests. And then what happens usually is the market makers will begin a very, very long and drawn out accumulation campaign or an absorption campaign where they're absorbing at the bottom this coin, but it's not one of those turnkey kind of things where it's just like one dump and then they pump it up and then we start another bull cycle. They don't do that. What we do is we go into what's called a counter trend, which we're in the midst of right now as we speak. And this counter trend, more often than not, takes the form of a rising wedge or a ascending channel. And so it's the major trend after a coin or a stock or whatever bottoms out, and then we come back up. And what this does is this is the beginning of a double bottom or sometimes a triple bottom. And so the first part of the W, you know what a W looks like this, right? So this will be like the bull cycle up here, and that we came out of, and then we bottom out. But that's the first bottom, and then we come back up. This is this area right here where that first half of the W, this is the counter trend. This is what we're in right now, and at some point it's going to top out. It's going to top out at some point. It's going to be the top of the counter trend. You're going to have a blow off top, and then the price is going to come back down to remitigate the prior lows. Sometimes it comes down as far as the first low. Other times it goes even further down and we get a terminal shakeout. And then sometimes it doesn't go nearly as far down as the first low. It goes maybe like halfway down, halfway between the counter trend. So if you were to do like the high and the low, the swing high and the swing low, if you were to swing this counter, then the midpoint of that trend, of the counter trend, would be the 0.5 Fibonacci. And sometimes Wyckoff has pointed out in the schematics, I believe it's schematic number 2, that we have the spring goes down to the 0.5 Fibonacci. And so it doesn't go as deep as the first low and mitigate there. So we don't know. That's the part that nobody knows about. We don't know how deep it's going to go, if it's going to come back down, how far down it's going to go. But we do know with pretty good certainty that it is going to come back down. Eventually, at some point, this wedge that we're in right now, this rising wedge rather, is going to break at some point. And so we don't know if we're going to put another leg up. We don't know if we're going to come back down and retest trend support, something like this, and then from here maybe do like another attempt at resistance. We don't know if that's going to happen, and we don't know if we're going to retest here and actually pass and have like another like rally here, another FOMO rally that could go all the way up potentially to $40,000 or like even higher. But that would be that would be all part of the exit liquidity grab. And what they would do is mitigate these upper liquidity voids that we see here. So this is fair game here. This redistribution pocket right here. This would, well, we've already surpassed this, but this is a big area. This is a key area right here. This area where we distributed at 38, 39 up here, and then even this area here. This would bring us up to $40,000 Bitcoin, 40.7. I think that this would be the top for sure if we were to go this high. That would be an anomaly. I think to go that high, it's certainly possible, but man, that would be a massive, massive double bottom if it were to do that, because the drop would just be cataclysmic from there. It's been done before. The point is that a meager distribution range, or like a meager bottom from here to say here, how many days is that? It's not nearly enough, nor is it deep enough. See, it's only 486 days that we've been in this so far, this counter trend. So that's not really long enough to sustain another bull macro movement up to what some people are saying, $100,000. $200,000, and you've heard it before, and we'll never see $20,000 Bitcoin again, and then we'll never see $25,000 Bitcoin again. We'll never see $30,000 Bitcoin again. They always say that over and over again. The Moon Boys repeat that as a mantra, and then what do we see? Sure enough, yeah, we come back down. They were saying that here. They were saying all that mumbo jumbo up here in these areas here during this counter trend. Never again, and then it came back up again, and it came back down again, remitigated the lows here and here. So where we are currently, we are in this counter trend wedge, and the lines, the trend, support and resistance are pretty clear cut. So here would be like, we'll call that the macro trend resistance, and then here would be the macro trend support, and we're starting to see them converge a little bit. It's starting to narrow just ever so slightly, and that's why I would be more inclined to name this a wedge rather than a channel. But like I said, it doesn't matter. Both of them are bearish ultimately. So right now, currently, we are fighting. We're at a war. Bitcoin's in a war right now, and the war is this area here. This is ground zero. So we see a lot of demand coming in. You know what this is? We see that here. And then this other area, the area before where we touched the macro trend resistance that was back in June, we also saw high demand volume, another series of spikes. And then here, this whole area up here, even though the demand was falling, you see like demand predominance, right? So the areas or the vertical bars that stick out the most, and you even see it in the Weiss wave here, the most prominent dynamic is that of demand, the buying power, which is really sticking out here. But the buying power is on a decline. Overall, the bars are decreasing as the price action goes up. So that's divergence. That is an ultimate. That is long-term bearish. That is bearish sentiment on the macro, and it would totally explain the formation that we're currently in, which is a rising wedge, which is bearish. So, but the reason why we see such demand at resistance, I'm going to explain this to you. This is showing that there is no value above this resistance line. These are a lot of buy orders coming in. You see all these buy orders here? The buy orders, every time the price action hits the macro trend resistance, we see a bunch of buy orders come in, just like this time. Look at all these buy orders. There's hardly any supply. It's all buy orders. But it's not propelling the price past the resistance zone. So that means that there's a lot of buy orders. There's a lot of bidding. Like I say, this is the sort of like the image that I can give you is, imagine you're at an auction and you've got all these people that are bidding, but no one's wanting to bid above a certain level. No one's willing to acquire something above a certain level and pay for it. So there's a lot of bidding, there's a lot of motion, there's a lot of commotion, but the price isn't rising. That means lack of value. Lack of value, despite all the buy orders. It is not motivating the price to go any higher. So that's why you see predominance of demand, and the price is slowly rising, but it's rising within a trend. It's marking up and marking down, marking up and marking down. But as far as like rallies that are successfully retesting key support zones like the macro trend resistance. We need to see this get retested, and we need to see a bunch of demand like we're seeing now, but we need to see the price action prevail along with the demand. We need correlation with demand and price action, and then we could say that this is legit and that we're going places. And even then, I would be wary because of all these liquidity voids up here. That these are key areas where there are supply blocks where the bots have been programmed to sell off their sell their supply. So, and then weak hands will be holding the bags up here, buying. See, this is all them buying. This is the weak hands buying. This is a lot of buying. So they're buying what the market makers are selling. And of course, the market makers are selling at resistance. Of course, they already bought down here. They bought at support and they're selling at resistance. You know, it's not rocket science. Now, let's go into the forensic. Let's look at the nitty gritty of what's going on with this battle here where we currently are. So we see here again. So this is looking, again, guys, this looks bearish. This structure here to me is bearish on first glance. It almost looks like a wedge on top of a wedge, right? So we got this wedge-like pattern. So we have a series of higher highs and higher lows. Look here at this top, at this area here. See, we topped out. This was that last high we got at 36,000. And then it looks like it formed the horns of the devil and it came back down to, this would be a micro trend now. This is micro trend support. Came back down to micro trend support. And here we see supply. Now on the forensic, we're seeing supply predominance. Remember on the macro, we saw demand predominance. On the micro, we're seeing supply predominance. And what happens on the micro eventually manifests in the macro. So as above, so below. You've heard that saying. Well, as in the micro, so in the macro. It just takes longer to play out because all of these are in fractal format. So we are seeing, again, a rising wedge, a micro rising wedge forming at the macro rising wedge resistance. So this can mean that we can continue to trend within this. See already we have a little micro rally here. So they're going to continue to battle it out, the bears and the bulls within this. And we may even get on top of here, retest, and then make another high, put another leg up, and then start gunning for those liquidity voids. But eventually the long-term prognosis is a mark down. But right now, this is looking like a rising wedge all on its own. So we're going to have to continue to monitor this. But yeah, my prognosis hasn't changed long term, bearish on Bitcoin. Hey guys, that's about all I've got. If this has helped you, I'd appreciate a thumbs up, subscription. Let me know in the comments what you think. Share some of your points of view. Share some of your technical analysis. I'd be welcome to hear that. In any case, yeah, I thank you all for tuning in. And until next time, happy and safe trading. None of this is financial advice. This is just my own TA that I share with you. I share with my group. And we'll have some more videos coming out shortly. I plan on doing something on Solana, Shiba Inu, and there's a few others. I think Cardano and XLM are on the docket. So we'll see. So stay tuned, subscribe, don't miss those updates. And I'll have more updates coming out with Bitcoin and also Ethereum. So, all right, guys, take care. Happy trading, safe trading. Adios. Bye-bye.